Well, let's start with the action on the Lal Street, where the bulls clearly bounced back from yesterday's sell-off and did so in style. The Sensex gaining over 1,500 points today, and the Nifty put on about 300 points thanks to strong global sentiment. All sectoral indices closing in the green, and the Nifty 50 stocks posted gains for the day. Anuj joins us now to wrap up the day's market action. What a bounce back, Anuj, by the bulls.
Stunning day for the market. Nobody could have thought that, we will do this kind of market action today. The SGX Nifty was indicating that we'll have a gap up, but the market opened much better than that and then kept building pace through the day. There was not a single intraday dip today. The Nifty was up over 2.5%. The Bank Nifty was up nearly 3.5%. And most of this was domestic in nature because globally there was no signal of something like this from either the US market futures or the Asian markets. The broader market has been very strong, so the big question is the start of something big? We'll find out. Quickly, let me run through the big gainers. Across the board, there were gainers, but financials stood out, whether it was names like Bajaj Finserv, Bajaj Finance or IndusInd Bank. But the real impetus came from the big ones, SBI, Kotak, the HDFC twins, ICICI Bank, and of course, others as well. On the gaining side, some of the other names which did well, Tech Mahindra, the Tata Group stocks, Tata Motors, Tata Steel, Titan, Maruti did well, Larsen did well, Infosys did well. As I said, today it was, almost like hitting a dart and, throwing a dart and it would hit a winner. The big question is this start of something big? We'll find out.
Anuj, many thanks. And shares of Reliance Industries today also bouncing back in trade a day after the company's annual general meeting. Multiple brokerages from Goldman Sachs, CLSA, Citi, UBS have a buy rating on the stock with the target price ranging from 2,800 rupees to more than 3,200 rupees a share. The street waving a thumbs up to the new investments proposed by Mukesh Ambani at the AGM. And let's now talk about the macros. GDP growth data for the first quarter of this financial year will be out tomorrow. A CNBC TV 18 poll is estimating a growth rate of 15%, and this is because of a low base as growth contracted by 26% in 2020 during the first COVID lockdown. The RBI has predicted a growth rate of over 16% for the first quarter, and our estimate is slightly below that at 15%. So that is going to be the big macro data to watch out for. But here's a CNBC TV 18 exclusive. The insurance regulator, that's the IRDAI, has proposed limiting the spend made by insurance companies. Sources say large general insurers have some reservations over the proposed move and are proposing a 30% standard limit on expenses. Yash is here with more. Yash.
Well, 2nd of August was when the insurance regulator IRDAI floated a draft consultation paper suggesting a cap on how much can insurance companies spend. Now, general insurance companies have submitted their suggestions, and there is a major change which has been sought by large general insurance companies here. IRDAI's draft consultation paper suggested capping of expenses of management at 30% or an average of the previous 3 years, but whichever out of the two is lower. General insurance companies want this particular caveat to be removed and have a standard cap of 30% on expenses of management, not having to follow the lower of the two. Now, these large general insurance companies feel that it will be negative for them if they are mandated to follow the lower of the two, which is 30% or an average of the previous 3 years, and it will only further reduce how much they can spend on acquiring business. Now, let's understand this by looking at the large general insurance companies which are in question and how much they've spent in the previous 3 years. ICICI Lombard has spent 28% of its gross premium as expenses of management. New India Assurance has spent 22%, Bajaj Allianz General Insurance at 23%, SBI General and HDFC Ergo at 21% and 23% respectively. All the large general insurance companies and what they've spent as EOM is lower than the standard EOM limit of 30% suggested by the insurance regulator. As per IRDAI's draft paper, if they have to choose the lower of 30% or the average of previous 3 years, the amount that these companies can spend will only get reduced even further. And that's the concern for these large general insurance companies. Instead, if these general insurance companies are given a standard limit of 30% on expenses of management, then how much additional do they get in terms of being able to spend? For ICICI Lombard, it gets 360 crore of additional money in terms of spending. New India Assurance, it goes as high as 2,600 crore. Bajaj Allianz at about 958 crore. SBI General and HDFC Ergo again at 825 and about 945 crore rupees. In fact, my colleague Abhimanyu Sharma spoke to the IRDAI chairman, who spoke about the draft paper on expenses of management and what it aims to achieve.
We have actually put up an exposure draft. Basically, the whole idea is to, rationalize the expenses so that when the pricing issue of the products is concerned, the customer should get the best price at the end of the day. So how do we rationalize the expenses of management? So we had constituted a working group comprising of industry and other stakeholders, and the regulator, some of our people were also there on those working groups. So the recommendation was there that why don't we have a single cap on the limit of expenses on management. There are some discussions going around the private equity investments into the insurance market. So we are looking at that. There are certain bottlenecks which they have pointed out, and we are looking at that, and we'll take a call very quickly, having discussions with the stakeholders also. So we'll look at the pros and cons, and as I said, very soon we will finalize whatever we have to do as the private equity funds are concerned, and the SPV, whether that is required or it's not required, can it be done away with. All of those are under deliberations and discussions at this point of time.
Well, that's the IRDA chairman. And from one exclusive to another, the chairman of the Central Board of Direct Taxes, Nitin Gupta, says the tax department has collected more than 4.75 lakh crore rupees so far in FY23 against the budgeted target of 14.2 lakh crores. Speaking with my colleague Timsy Jaipuria, the chairman said that the department has conducted search and seizure operations on 33% more groups till July this year as compared with last year. And this has led to an over 500% jump in cash seizures specifically. Take a look.
Right now, against the budget target of 14.20 lakh crore, we have achieved collection of more than 4,75,000 crore, which is at the growth of around 33%. The gross collections are still better, with a growth of around 38 to 39%. In spite of more refund outgo, which we want that should be enhanced, the collections are very robust at the and going at the rate of around 33%. Corporate tax as well as personal income tax, on both the side, the collections are robust, and I think the actual picture would emerge once we get the second installment of advance tax in the month of September. So a better analysis can be made around 20th of September once we get the figures for the second installment. Till July, the enforcement actions number of groups searched has been 33% more than what had been in the corresponding period in the last financial year. And we have more cash seizure has been made, which is to the tune of around 250 crores as against 40 crores in the last financial year in the corresponding period.
Well, a significant jump in cash seizures, that is the new CBDT chief. Now, Kotak Mahindra Bank has responded to a recent report highlighting the significantly high number of frauds being reported by the bank. And the bank has raised concerns about inconsistency in fraud reporting by other banks. Kotak Mahindra Bank says it's raised this issue with the Reserve Bank of India. Ritu joins us now to explain. So, Ritu, Kotak Mahindra Bank essentially sending out a message to the regulator saying that there needs to be uniformity in reporting by banks on frauds.
Well, let me first set the context where recent RBI data showed that Kotak Mahindra Bank reported 5,278 frauds in the April-June quarter of this financial year, which is by far the highest compared to all other banks. And this stands in stark contrast when you compare it to, say, an ICICI Bank, which reported 436 frauds, HDFC Bank 303, IndusInd Bank 200, and so on. And it gets even more interesting if you look at the number of frauds reported by public sector banks, which are far larger in size, with a few exceptions like IOB and Central Bank, the other PSBs like SBI have reported single-digit frauds, less than 10 cases. Now, Kotak Mahindra Bank has released a statement which could explain this huge differential. Kotak Bank says comparing the frauds reported across banks is like comparing apples to oranges. It said, and I quote, "We have observed that there is significant variance in what is chosen to be reported to the regulator by other banks. We have appealed to the regulator via our letters dated 17th March and 30th of August 2022 to enforce standardization in reporting requirements," end of quote. Now, for the period reported, of the 5,200 odd instances for Kotak, actually 97% are digital and car-related frauds, which often occur because of customers sharing their passwords, PINs, or clicking on unknown links, etc. And Kotak Mahindra Bank has alleged that other banks do not appear to be exhaustively or uniformly reporting these kinds of frauds, which could explain why the number of frauds reported by Kotak Mahindra Bank is far, far higher. Now, is the number of such card and digital frauds actually higher in volume than other kinds of frauds? Well, yes, RBI data does support this. In FY22, for instance, almost 40% of all customer complaints regarding frauds were linked to ATM and debit card transactions or mobile and electronic banking, compared to only 28% of complaints relating to loans and advances. So the summary is, don't just go by headline numbers. There is more than meets the eye.
Well, that's an interesting story there, Ritu. Many thanks for joining us. The Economic Advisory Council to the Prime Minister has released the Competitiveness Roadmap for India at 100. It's a blueprint for the next 25 years for India, leading to 2047. The roadmap outlines guiding principles for India's growth journey based on the 4 S, which are social progress, sharing, sustainability, and in dealing with external shocks. Shares of Nazara Tech surging after the company said it acquired US-based children's interactive entertainment company WildWorks. Nazara will acquire 100% of the company and its IP from existing shareholders in an all-cash transaction worth $10.4 million. The twin Shrey companies, Shrey Infra and Shrey Equipment Finance, have received 2 bids under the Insolvency and Bankruptcy Code. The deadline to submit the bids ended yesterday following multiple extensions. One is a joint bid by foreign investors, Varde Partners and Arena Investors. The other is from a little-known H&I investor consortium comprising Sean Randhava and Rajesh Viren Shah. Meanwhile, Godrej Industries Chairman Nadir Godrej spoke about the conglomerate's business picking up across segments like Godrej Properties and the consumer business. He said the company may be eyeing an IPO for Godrej Capital in the next 2 to 3 years. He also sees inflationary pressures receding by April next year, adding that rural demand is not that bad.
We saw that the July inflation was lower than the June inflation. By March, April, everyone is expecting inflation numbers in India to be quite reasonable. Our balance of payments have been affected by the inflation, but our growth rate has not really been affected much, and we are growing much faster than most economies. And that is likely to continue, but we have to be careful. There's been a little bit of deficiency in the monsoon, but overall it's not all that bad. And we also expect very good rabi crops because in the last few years, the monsoon has extended quite late, and that's very good for the rabi crops, but it's very variable. So the kharif crops have been, for the last 2 or 3 years, some degree of damage. But I don't think rural demand is all that bad.
Well, that's Nadir Godrej saying rural demand is not all that bad for the company. But let's now bring you a CNBC TV 18 exclusive news break. The government has started to penalize companies for flouting the EV incentive scheme norms. Sources tell us the government has put the subsidies of Hero Electric and Okinawa on hold for allegedly claiming incentives for products but are not actually made in India. Parikshit Luthra is standing by with more. Parikshit, take us through the action that the government is initiating against both Hero Electric and Okinawa, and what exactly is the allegation?
We recently had reported that the government has introduced an application programming interface to ensure compliance with domestic value addition criteria in the FAME and the PLI scheme. And this has been done because there were a lot of complaints about EV players wrongfully claiming EV subsidies, but not actually making those components or products in India. There were complaints about Hero Electric, Okinawa and other EV players, and we believe from sources that after a probe, the government has put FAME incentives for Hero Electric and Okinawa on hold because they had wrongfully claimed incentives. Approximately 60 to 70 crore worth of incentives will be adjusted against future payments to Hero Electric and Okinawa. Companies like Hero Electric and Okinawa had claimed incentives for products not made in India, according to our sources. What the government is now telling us, and we're learning from our sources, that wrongdoings through the new mechanisms are now being curbed at initial stages instantaneously. The application programming interface will help the government get the digital footprint from the company in case there is a complaint. There are other EV players which are under a probe as well. The ARAI is also being reformed by the government, and very soon the government could put out guidelines and criteria for ARAI to certify companies, EV companies, for their true real-world range rather than lab testing. Because in the past, the lab-delivered range for these vehicles and the real range on the roads during commercial usage has created doubts and controversy. So the government wants to ensure that there is trust in the testing system, trust in the certification system, and therefore true range must be the criteria, and all the loopholes in terms of submission of DVA criteria must be plugged, and anyone who tries to flout the norms must be stopped instantaneously.
Parikshit, many thanks for joining us. That is the CNBC TV 18 exclusive news break this evening. But the big newsmaker this evening, Hitachi Energy, is betting big on India. The global CEO of the company spoke exclusively to us. He said Hitachi is looking at both organic and inorganic growth opportunities in India. He believes rapid urbanization and electrification of transport and railways in particular should be priorities for India.
We need to better understand the needs of our customers when they electrify transportation, when they electrify their processes on the industry side. We need to better understand also these complementary sources of energy, clean energy, such as hydrogen. And we're working on that globally, but certainly looking more and more into how India can contribute to that global growth and that transition. The plan for India is to, if I well remember some data points, to bring or move roughly 270 million people into urban areas. And of course, then to also then electrify the transportation mode, not only electrical vehicles, but also electrify the entire rail system in India, which is absolutely the right priority. Number one for us, investments is organic, is in innovation. That's our core. That's who we are. We want to keep the leadership in terms of technology. But of course, because a lot of this technology is also evolving very fast, as you well know, in many areas, we will use partnerships, and also we will use inorganic investments in order to help us accelerating the deployment of some of those technologies. We are in a growth pattern. We are hiring in India. We're hiring globally. We're hiring talents and engineers that will help us in delivering all the commitments that we've been making to our customers and the trust that our customers have put on us. Growth is not an issue today, and we're lucky to be in that position, but we need to make sure that we do the right things so that we can deliver on those commitments on time.